Hey, it's Richard with Matthews Wealth Management. Still sunburned from that Clemson game, but we're now going to cover M2 and Fed balance sheet for October of 2023. I'm going to try to add something at the end of this. We'll see how well it goes because technology. Boring. This looks the same, right? But a little different. Let's zoom in, check it out. So this is what we remembered seeing, and that debt ceiling would be suspended. But hey, it's actually starting to turn down again. Now that's the weird part of why I've added something to the end of this is I've read multiple articles saying that since debt ceiling's been suspended, we are projecting an additional $1 trillion to be spent in the month of November, like it is right now, and an additional $1 trillion to go into December, which would bring us up to an additional $3.5 trillion since June throughout the rest of the year. But I think what's happening in those articles, maybe they're too biased in the way that I want them to be, because there's the normal 1.7 trillion of deficit spending that we do, each year because who cares? But so to say 3.5, it actually might be a net 1.8. You see what I mean? Like it's the 1.7 plus another 1.8, and that's why they're saying 3.5, because I can't find an additional 3.5. And I'll show you what I'm talking about. But yeah, so that's good, right? We want M2 to drop. We want M2 to try to come back not only to the, good gracious, that's 15 trillion, 15.4 trillion, 15.396, something like that. It's weird. I'm starting to remember these numbers. But yeah, so we actually want it, if it goes there, that's a good start, right? Like, let's undo what we did in COVID. Let's get prices to where people can go get dinner again. But here we are, currently 20.7 trillion. A month ago, yeah, they keep revising these numbers. It's terrible, but 20.8. So they've actually cut money supply by 1/3% in one month. Yay. Try 2%. That'd be awesome. But third is not nothing. So year to date, it changed, whatever, but we've shrunk money supply by only 2.2%, and that's the frustration that I have from the suspension of the debt ceiling, plus the BTFP that we did when Silicon Valley and all that stuff was going on, whatever. A year ago at this time, and by the way, I think this was end of September, right? So this is only a 1 month lag on M2. It's the other one that's more current. But so a year ago, 3.57. That's not much in a year. But hey, if we have our inflation number getting closer to our 2% arbitrary target, then, I mean, a negative is good because it'll average that out and bring that overall back down to a zero. It's not actually going negative, is I guess what I'm getting at. So since January of 2020, we've increased the amount of money floating around the world by 34%. So your prices are a piece of that, right? Like it goes off of money supply. People say inflation and they're talking about prices. That is not inflation. Inflation is this. Like it's cause and effect, guys. It's super, super simple. Just learn it. Tell people about it too. All right, let's check out the balance sheet because this is a piece of money supply, right? Like when the Treasury needs money, needs to fund the government, they issue bonds and nobody buys it except the Fed. And the Fed prints the money to buy the bonds that are worthless. So technically they're super negative equity. Like if we had mark to market, gosh, for the bonds and debt that the Fed is sitting on this balance sheet, whatever, y'all know my thoughts. All right, so we're at 7.8 trillion that this bankrupt bank decides to hold on to. But hey, they're selling it. Since BTFP, they're selling it. That's a pretty good slope, right? So let's check out closer. There's closer. Yeah, these are weekly, right? So the last one, M2, is monthly. This one is weekly. And this weekly revises too. Go figure. All right, so in the last month, this is better. This is more like it, honestly. The Fed is, I've been surprised, happy, I guess, with the fact that they're selling these bonds for a loss. Whatever. But yeah, so they sold 1.5% of their balance sheet in the month of October. Year to date, we're down 4.5. Still not super great, but it's because of that spike that we had with the the new bailout. A year ago, we're down 8%. Cool, just 12 years to go or whatever. Since January, just under doubling their balance sheet size. Why do they have a balance sheet at all? I don't know. Why do they exist at all? I don't know. All right, so let's just get down to the bottom numbers in dollars, because most people don't like percents. And honestly, percents of different amounts matters. That's why we go back to dollars here. So balance sheet growth, they actually sold off of their balance sheet 122 billion. M2 shrunk by 70 billion. So that means that 51.6 billion is what Congress spent above what they brought in, right? And again, that US debt clock video, which has a lot of views. That's cool. Yay. If you're new to the channel, then comment here too. I like to talk about this stuff, but clients hear me enough in meetings. That's why they're not commenting. So yeah, let me dive into what I wanted to talk about with this. All right, so this is put out by the Treasury, right? US Treasury does these monthly reports. And so I went back and I looked at all the months for 2023. And just to show you how the federal government spends its money, you've got receipts, outlays, surplus, deficit for January. And then it continues. It's however many pages on this, 40 pages per report. But this is the one I think that we can get towards. We have individual income tax, social insurance, retirement, so FICA. And then we have corporate income tax, okay, customs duties, excise tax, estate tax. That's low-hanging fruit for them, FYI, it's coming. And then miscellaneous. It's nice to have a miscellaneous $2 billion income, right? So, and then you've got the amount they spent on Social Security, disability, Medicare, health, just health. Net interest, oh, that's fun. National defense, offense. It's not defense, guys, it's offense. Education, doing a great job. We got some smart people out there. Veterans benefits, transportation, just 13 billion other, who cares? But all in all, $39 billion deficit. Okay, that sucks. I wish all of this could fit in. Well, actually, let's shrink it all. That's what I really think. But 39 billion deficit. So let's check out, see if I can get all this stuff orchestrated. February. February sucked. 262 billion. That's 0.26 trillion. That's a $250 billion. Again, I don't think y'all understand numbers just in general, because this Department of Education is not good at their job. But good gracious, that's huge, right? And that's a big month. A lot of people died in February, right? That was a much bigger estate amount there. Corporate income tax, hardly anything, because they pay quarterly. Yeah, you can compare all these if you want to, but whoa, we got to a crazy one. And keep in mind, I'm trying to prove something beyond June. However, and I think I'm trying to rationalize as I go here, but remember, we were scared about the debt ceiling initially in February. Well, yeah, we should have been, right? We should have, been redoing a lot of stuff. So let me try to get March up here. 378. Oh my gosh, it's not getting better. That's over 1/3 of a trillion. So we just went from a quarter to a third. Hey, y'all remember the quarter pounder versus the third pounder deal with A&W back in the day, and Americans weren't smart enough to know that a third was more than a fourth? I hope you understand that's a lot more money that we had to print. And that shows up as inflation, right? Prices going up. So let's check out April, because remember, we haven't gotten the debt ceiling yet. Whoa, y'all, it's been a while, right? Why? Because we all do our taxes and we pay a bunch of money in April. So we ended up with a surplus. What if we could do that every single month? That would be cool. Nothing else major happening in here. 30 billion to other. That's something else major. All right, let's jump to May. All right, we're back to deficits. Another $250 billion. Heck of a lot more there this time. That was different. And June. Okay, what's happening in June? Another $250 billion. $250 billion a month. That's crazy. We spend 6.1 trillion a year, right? If you check usdebtclock.org. Gosh, I'm kind of getting sick of plugging them, but anyway. Plus, they never responded to my email. I sent them an email with a question in the comments, and they never got back to me. So I'm not super thrilled with that. I guess they're busy. Blah blah. let's go to, that was June, right? So we suspended the debt ceiling there. And then July. It's still the same, right? Like, again, this is what I'm getting at. I think that when people are saying 3.5 trillion in deficit spending this year, or since the debt ceiling was suspended, don't think that's exactly accurate. I think they're taking the 1.8 and the 1.7 and kind of, proving a point that's not really there. But by percentage, look at that. That's like more than 50% of your spending is just printing money. Maybe this should be smaller. All right, and then we get to August. And August is the last one I got, okay? Because it's now November, but the government is pretty slow at doing this, apparently, this work. And they have a surplus, right? So in August, they ended up with a surplus after the debt ceiling was suspended. So I'm not seeing it. I'm not seeing the overall additional massive spending going out above and beyond. However, what in the world, y'all? 301 billion is other. This is where I get a little bit curious because, okay, 90 billion, but 116 is this big. Like we're gonna show it in like a way that we can kind of wrap our head around the size of things. I forgot what kind of charts you call these. But 301 is more than that. So is it because it's red? Red means it's bigger. I don't get the scaling of this, but 301 billion went to other. The first month after July had a decent normal deficit. So that's wrong. Add that up. It's not a surplus. Sorry. That's easy to figure out. That's misleading. Whereas the what is it, FCC, right? That's a misleading trade practice. Truth in advertising, but yeah, fact check right there. Okay, so I guess all in all, what I'm trying to say is we've been operating under this theory that the Fed's flaw in Phillips curve, they're expecting that raising rates will cause massive unemployment. Well, guess what? It did, and it does. COVID caused it first, and we kept it with increasing rates. But they're not seeing it because the not in labor force number, dude from Colorado, get back at me. But yeah, the not in labor force number of 99 million people, it's easy to manipulate, right? If we just throw another 6 million or so back into the labor force, we can artificially, not really, but more accurately count a much higher unemployment rate, which gives the Fed what they need to say mission accomplished, lower rates. You're seeing it in yields. That's from the asset class video. You're seeing it in yields that people are considering, hey, the Fed might actually cut. And with the inflation that's coming and not properly represented, they're going to need to raise rates again later. So you have to cut them before you can re-raise them. And the Fed is just caught between this thing in an election year next year. So let's just watch what's happening with interest rates. I think we may actually get a cut. We may get a pivot, right? They've kind of pivoted by holding for two meetings now. And in history, they've never raised after holding it for two. So if history is a clue, then I think they have to cut it so that they can then raise it after the election. We'll see if that works. But that's a bunch of crap. Thanks, government. All right, we'll see you to talk about November in about a month or so.